Hello viewers, welcome to my channel Investing Supervision. So in this video today I'm going to talk about the Asm framework, which will tell you how to identifying the manipulating stocks in the market. Many people comes to me stating that, sir, how to identifying the operating stocks in the market, how to identifying the stocks which are getting manipulated in the market. So like if I go to see the earlier days of the Indian stock market, a lot of manipulation used to happen in the earlier days because there were less cappings from the SEBI on the different stocks. So now in order to mitigate the manipulation activity in the stock market, SEBI came up with a new rule which is entitled as the new circular for the stock market, which tells you that if the company is not supporting the criteria which has been laid down by the SEBI, then that company will be put under the Asm framework. So now let me tell you about the Asm framework. So Asm is nothing but the additional surveillance measurement, which is a technique or a tool to identify the manipulating stocks in the market. So now what happens? So basically there are two criteria from which you can get to know whether the company is put under the Asm framework or not. So the first one is if the company is having 5% of upper band. So this will be the first criteria wherein you will decide whether the company has put under the Asm framework or not. And the second factor is you won't be getting the leverage on the stock which you would like to trade. So in the sense, you will have to give 100% margin on the company which has been put under the Asm framework. So now, like if I gonna talk about, so basically if I were to talk about the companies which were there in the Asm framework, if I throw lights on the companies or the pockets, these companies would be like Bhansali Engineering was one of the stocks which was put under the Asm framework, the Bombay Dyeing and the Vakranji. So these are the stocks I feel like some or the other ways the manipulation activity is being taken place. So like that was the same reason this company went into the Asm framework. So SEBI says that it does not mean when the company goes into the Asm framework, it doesn't mean that the company is getting manipulated. It means the company is not complying with the rules which has been laid down by the SEBI. So basically, if you want to identify the stocks which is going to be put or which is going to be categorized as the Asm framework stocks, there are 5 objective criteria or the parameters which will decide whether the company will go under Asm framework or not. So these five criteria are, the first one is high volume variation. Let's say the company, so there is a company known as ABC which is quoting at 100 rupees right now. So let's say this company again goes up to 110, again comes up to 100 rupees. So if this company is giving good amount of the frequency level in between the highs and lows, then some or the other ways this will give some sort of idea or the indications to the Asm framework department. The second criteria is client concentration. Client concentration is nothing but the number of the people who are causing the company's price to hit its upper circuit and the lower circuit. Let's say there are 25 people who are bearing an impact on the pocket, which is nothing but the stock, and the company is hitting upper circuit and lower circuit in very high frequency manner, and that too by only 25 people. So this portrays that the client concentration is very low, then too the company is hitting its upper and the lower circuit. It means this also gives an indications the company which is likely to be go under the Asm framework. The third criteria to select the company for the Asm framework is the number of the price band hit by the company. So let's say there is a company which hits its upper circuit and the lower circuit 5 or 10 times in a day or in one trading session. So this is also a capping which has been imposed by the SEBI on the pockets or on the stocks, wherein if the company is having high amount of frequency which is hitting its upper circuit and lower circuit on a larger extent or to a larger extent, this criteria will also decide that the company is more likely to go under the Asm framework. So the three aspects or three criteria I have already talked about. The fourth criteria to select the company for the ASM framework is the PE ratio. So if the PE ratio of the stock is above 15% or 20%, and at the same time these companies are supporting the above four criteria, the above three criteria as well, then it gives you an indication that yeah, the company is having an objections from the stock market, which is giving indications to the ASM or the additional surveillance department that yeah, this company is more likely to go into the ASM framework. The fifth criteria to select the company for the ASM framework is the close to close price variation. So the close to close price variation is nothing but, let's say there is a pocket ABC. So the stock ABC is getting closed at the same rate for more number of days. If I were to break this down, this is nothing but, let's say there is a company who closed at 100 rupees, and if the same company closes at 100 rupees tomorrow and the same company closes at 100 rupees or 102 nearby area, then it means the close to close variation is very low. So this will also give an ASM framework department to select the company for their the measurement purpose. So what I mean to say is, if the companies are going into ASM framework, you don't have to trade in these companies. Why? In the beginning, as I have said, that if these companies are going into ASM framework, there will be T2T segment, which is nothing but the trade to trade. So you won't be able to do intraday trading in these kind of stocks. So you'll have to take the delivery of these pockets in which you would like to trade if these companies are available into ASM framework. The second thing which I would like to tell you is, if you are trading into these stocks, the brokerage firm will not be giving you leverage, because a lot of risk is associated with this particular pockets, because these companies are supporting all the objective criteria which has been laid down by the SEBI to identify the stock which is not quoting in the market up to the mark. So I would say, if the companies are available into ASM framework, stay away from these pockets, because these pockets are more likely to hit you, because these are the companies wherein I would say some or the other ways the illegal activity is being taken place. So in the same manner, I'll be coming up with many more videos with respect to the technical analysis, fundamental analysis, which I talked about in my the intro video of the investing supervision. So if you would like to know more about the stock market, and I would say if you are very new to the stock market or the novice trader or the investors, I would say this is the best channel which you could approach. And in the same manner, I'll be coming up with many more videos. So till then, stay tuned and see you guys.